or should I just
You can
call
go in
one
any
out?
order. Of course, I always like to start with HEX.
I think there's no better crypto to start with. Let's do it.
We got here HEX on the 3-day, and I've brought this chart up now multiple times over the last few streams I've been on, because this is a 3-day chart. It's showing you data all the way since the top. The price chart is in this giant descending channel, same as a lot of the charts across all asset classes right now, and it got rejected off the high 3 times, and then now we're starting to build support down here, which gives us this, if you see here in white, the falling wedge. So if I delete this out, you can see cleanly there's a falling wedge here, and this is a bullish pattern. So what happens is the amount of coins that you could sell at 10 cents to drop the price lower, it takes 5 to 10 times more now to drop the price the same amount as it did back then. So in other words, if you sold 100 million hex at 10 cents, you have the same effect now. You have to sell a billion hex in one market press, and there's just not that many participants in the system with that kind of quantity of hex that's willing to dump at these prices. And that's effectively why you're starting to see volatility in the chart decrease and downside decreasing as well. And then the price is effectively getting squeezed into this channel or up to into next spring, and eventually which will lead to a breakout and then eventual continuation higher. This thing does have product market fit. It's backed by some of the biggest names in crypto, multi-billionaire people. There's $6 billion locked up in stakes. So it's here to stay. The code can't be changed. The code can't be shut off. There's a lot of things like that makes it a sure bet going into the next bull run. And your opportunity zones are, anywhere below these levels down to sub penny are good buying opportunities when you're looking at this on a 5 or 10 year time frame. There was $13 million day of volume, which is a good day for us on HEX. Usually it's like between 5 and 7. But here you can see that down here in the volume bars that they trend down, and then you get a spike and an injection of liquidity, and that's when you get the run-ups. Then they trend down, then you get a spike in liquidity, and that's when you get these run-ups. This was an 80% run-up.
What's the timeline?
We're looking at a 3-day chart.
So how many hours then is? You know how you just measured those spikes, the volume spikes?
Yeah, so these spikes happen. Like, so for example, this one back in when was that? December of last year, we spiked up for 18 days and we saw 182%.
But what was it prior to that? What was that distance? Remember you angled?
Oh,
yeah. What's that timeline? Because it looks like it's unison. That one and the other one looked before each spike.
Yeah, so this is like 90 days of volume decreasing. This is about 111 days of volume decreasing. This is about 63 days of volume decreasing. So the amount of time that volume decreases is shortening, which is, so there's less time between pumps.
Yeah.
And so effectively now we're at, when was the best time to buy Bitcoin? Richard Hart always says that. Well, it's when the volume was the lowest and it was the hardest to acquire. Well, now volume is now getting to the lowest it's been since April, before that run up that took us up 89% from 11 cents to 20 cents in 15 days, and for an 88% return. So we're just going to fall, squeeze into this wedge, squeeze, and all the opportunity you can see on the RSI down here is below this key level here of 40. So when the RSI gets into this band is when you want to be looking to make your decision.
So from the last, basically, and again, if you used around 90 days as the average, that's from the last pump. You just measure out, and that's probably close to 3/4 of the apex.
If you get 90 days out from here, and the price stays flat, you're going to break out within 60 days. You need downside action.
No, I meant the side from the resistant line that's come to 45 coming down.
Yeah, you're 90 days basically. So price and time, you'd be looking at 2-cent hex by March 5th, and that would be the bottom, and you'd get some massive squeeze out of here.
And that's the other thing, really. There's two elements to charts in, again, my studies, is price and time, and the most important is time. So again, WD Gann is another a great guy to go read about. Amazing studies of markets and what he uses, from astronomy to, waves. It's interesting.
Here you can see the full HEX chart, and you can see like HEX ran up 25,000% in 300 days. So now we needed time to blow the steam out of the engine. So we've been trending down for 455 days. I say you double that, so 600 days puts you at, May. So like again, coming into next summer, we should see a breakout above these resistance lines. No crystal ball, but if that were to occur, you'd be seeing price action above 4 cents, 5 cents by that time frame.
I think you're going to get a lot of bad news the first and second quarter next year. So again, that falls in line with that time frame.
Also, the other thing to keep in mind is just simple price structure. So if I draw that line and I draw this line, these are the levels that are going to be protected by where most of the time spent was. So there was 150 days spent between a half a penny and 2 cents, and we spent another 230 days, right below that, from like 0.003 to 0.002 to 0.006. So to break these levels would take a tremendous amount of selling and force. And I can't say too much beyond that because I don't want to compromise what's going on, but just that a lot of the HEX that was risky has been sold off. Most of it in this giant dump here. So, calculated risk, people. It's about as much as I could say for now on HEX. I don't know, RH, if you want to see like a price targets for the next bull run, maybe. Or that's kind of
what we keep saying are, people, you haven't missed anything yet.
Yeah, you're early still.
Yeah, we had a couple questions on HEX.
Okay.
Things were around what's the better thing to put in money today? HEX, Hedron, Icosa, stuff like that. So we can just hit some of the charts you can talk about.
That's a great question, though. I like that question, and it's relevant to what we're talking about here, which is, if you're coming in with no exposure to cryptocurrency or little exposure, I'm talking like less than 5 figures, like where do you put your money? Well, it kind of depends on what your strategy is. How long are you in this for, and what's your strategy? So in my opinion, this is just an opinion of what I'm doing if I'm new to cryptocurrency. Well, I would always encourage myself to stake a ladder, because then I can hedge any kinds of losses on the asset by the returns I'm getting back in the coin over a 5 or 10 year period. So I'm basically saying that this thing's got product market fit. It's going to be here a while, and I'm going to be able to earn 25% more, 30% more coins every year over year. And within 3 years, I'm going to have double the coins I had. So that means the price would have to fall 50% or more year over year for me to be suffering. And at these prices, when HEX is up 43,000% off the low, or 50,000%, and it's down 94%, it's at that sweet spot right now where, like I said before, the downside's limited, upside is nearly unlimited if it's competing with banks. But then you got to look at, let's go into the Hedron chart now. There's a couple things that are very interesting about this chart, and a couple alpha points that I've dropped in the last few days. I think Hedron's undervalued personally. I purchase it at these prices because I recognize that, we're at the launch price for Hedron. So I'm going to pull up a tweet that I made the other day. And it'll should be very clear when you see it. So this chart shows you HEX in pink and Hedron in purple. Their launch price is 1. And so Hedron has oscillated under and over this line in a 30x range. From the low to the high, that was 30 times. And so it's oscillated this range for, let's check the time frame. From the beginning till now, 284 days. Well, we all know what happened to HEX in its first 364 days, and we're only 280 days in. So for me, I still see Hedron as a huge opportunity at these prices where you're basically at the starting price. That, you know, I would put some of my, like if I'm buying for myself, I would do some in a ladder, and I'd be buying some Hedron as well. That's just me. Icosa is a unique
very unique.
chart
I
in
was
and of
trying to get
itself.
Sloth and some other folks to talk about some of the fundamentals and why that's playing into the price action too, because it's looking different than it was a month ago. But I think it plays within the system of how it works as well.
Yeah, so Icosa USD has $200,000 liquidity in here, so it's a decent sized pool, and potentially, Sloth pointed out to me this morning that this could be setting up for some sort of a triple bottom, something like this, and it is making a higher low as of right now. So on the dollar chart, it looks better than against HEX. So when I pull up Icosa HEX, it looks a little different to me. But it's not necessarily a bad thing. If I can find the dang thing. So it broke parity. Like it was basically within this range for basically since it started. It was holding this basically this trend here where it was more or less just oscillating inside of this level here, right? Hold on, my computer is dying right now. Okay, so it was basically in this uptrend for the first 90 days, and then we had a major sell-off. And so what I was telling people in the private group was there would be a potentially opportunity down here at this red line, which was the wick low on this sell-off under low liquidity conditions. And so relative to HEX, it's lost valuation, but relative to the dollar, it's in an uptrend technically right now. So there's only $34,000 liquidity on this pair. There's like 200,000 on the USDC pair. I do see it as finding support here soon. And so it could be a tremendous opportunity below this red line or around it. And back to Hedron. I know I'm jumping around a lot right now, but the Hedron chart against HEX. Hedron against HEX. This is a key chart to watch. Here I have in blue, I have the OA wall. So this is basically where the liquidity will show. I'll show you the liquidity for it because it's key to this understanding is. Okay. You can see here that most of the liquidity down here is sitting with like, much less coins than where this huge OA wall was. This is where the this wall represents where the OA put a bunch of HEX to stop price from moving higher. But then when Hedron had its 30x run up off the low, it broke through this wall and it started to move. It moved Hedron price up in dollar terms and against HEX. And that's what this chart here is describing to you is when the OA wall was put into place, it was put into place here and created a cascading down of valuation against HEX because people were able to take huge profits because those HEX were into HEX at that time. But then we had the run up in anticipation of the auctions, and this major price action happened to get us out of the OA wall and got us way above it so that the second wave of selling could occur. And so now we're just reverting back to the mean where all of the huge bands are. And so if you're a pro Hedron and you have a lot of HEX or you have a lot of USDC sidelined, the place to accumulate would be somewhere in this band, which is somewhere between 20,000 HEX per Hedron, or 20,000 Hedron per HEX, or 25,000 Hedron per HEX inside this band. So there's still potential downside here, but ultimately it will catch in USD terms. It's still at its launch price. So effectively, I do anticipate that Hedron and HEX will take turns leading the charge. Right now, HEX is in charge, and Hedron took the back seat. But for a time, Hedron was in charge, and HEX took the back seat. So I anticipate that over the lifetime of this chart, that as HEX goes up in price in USD terms, that Hedron will track it just in the same way that it's tracking the T-share rate and the inflation rate as Icosa is, and they're all tracking essentially the value accrual in the form of the T-share, which is ultimately the same in the same way that how monetary policy is driven by the Fed in their system. So they're just different financial systems. That's a good way to look at them neutrally. And They're all good opportunities at these prices. Bob can attest.
Do you want to look at the
Questions?
TLSD?
Yeah, no, I'm sorry, I had my mute on.
I'm sorry, Bob. Yeah, go ahead.
Still
Yeah, we
moving.
can look at PLC.
No, I was just going to say, when you were talking about somebody coming in for the first time, I'm telling people that have got in and paid higher prices, these are the points in which you have, and I personally have been accumulating Bitcoin and Ethereum at these levels. My background is, I got into Bitcoin, just to give you some background on that. In 15, I purchased about Bitcoin for about $4,000, and I dumped it at 60, and now I'm just getting back to buying. So I'm dollar cost averaging in these levels now on Bitcoin. Ethereum also is actually more exciting. It's actually, I think, holding up a lot better. Again, because the technology that's driven under it, it's the main. I think it's more applicable to the technology than Bitcoin. Bitcoin's almost like a collector's item to an extent. But yeah, these are the areas. Again, I'm still looking. You're not late to the event, but if we got to 12 on Bitcoin, it's not going to be there long. And same thing if Ethereum could have already made, their lows around that 835. So again, it's just, being able to dollar cost average. You're not going to be picking the absolute bottom, but over time, I think, again, 2025 is where I think, again, the imbalances of the economy, the recession, and everything is you're going to be able to see things going forward. But until then, we're just going to be, again,
it's a buyer's market down here. Like, if you're fearful and you're selling, you're on the wrong side.
Because if the dollar is truly what what I perceive is it's reached its peak, then I think those assets that have gotten clobbered, nobody knows how to price them, because in the end of the day, this is what's happening. People are pricing in assets valued, including whatever the average cost of money is now. It's been zero before, so this rebalancing is what's been brutal, volatile.
Bob, check out the 6-month chart on the dollar here. Like this, look at this candle that just is printing. It's got 23 days to close. This is a 6-month chart of the dollar. This is one of the most bearish. If this candle prints like this, I don't see another chart on here. Look, here's one, and it had follow through.
Yeah. Like I said,
down.
I've been long the VIX about 3 days now, and that's another chart. It's been, just dog.
So we think that the dollar is like toast, and basically, and that this is going to be a 1 or 2 year growing period. And I mean, before Bob, I'm going to come back to Bitcoin and ETH in a second. We don't got a lot of time left.
Go ahead. Go.
I got to talk about Pulse Dogecoin here for the peoples, because it did have a key breakout of this downtrend resistance, and it went up and tested the 0.786. Now, I drew this double bottom in here again in the private Discord. I gotta shill my bags, because we do a lot of good work in there, and I daily updates. I'm doing them multiple times a day. We called for a test at the top of the trend line here, and it broke and then came back in, and I'm pretty sure I had a RS. Okay, that's not the same, but anyway, so we tested the 0.618, which was what I thought was going to happen, and then I thought we'd get a rejection. We didn't. It continued, and what it continued on was hype around the ASIC token here, which had a key breakout, and Pulse Bitcoin, which also had a key breakout, and now they're on huge tears. So these are all their own little mini ecosystem that are moving independently of the entire market. So now I guess we can go back into just a quick comparison of Bitcoin. I want to show you this chart first. I'll show it to you on the monthly. I mean, you can see here Bitcoin over its entire lifetime in this giant logarithmic growth curve. And if you just took the bottom at, like, let's say, like the 13.7K top from 2019 summer, and get us down to that level, and then start to create some sort of a bottom off this bottom blue growth curve, then you'd be trading between 20,000 and 36,000 sometime going into 2024, and then building structure, and then maybe sometime midsummer 2024 we finally start to make our ascent for the ultimate bull run, which would come in 2025, with those targets based on previous fractals landing dead nuts between these, right above the midline here of the channel of the trend, somewhere between like 90,000 and 120 per Bitcoin, and within 3 years, roughly. And that's under the circumstances that the Fed, changes their pivots and changes their stance. Money becomes a little more accessible, and things start to change that way. Now, interesting also with that is the Ethereum chart. It's looking much better. I mean, we all understand that Ethereum is where all the value is. All of our favorite assets are built on Ethereum. We use it as a utility, but it's also now deflationary, so it's got long-term viability. And it's nothing proves that more to me than when I look at the Ethereum Bitcoin chart as here. So when you look at the Ethereum Bitcoin chart, since it bottomed in September of 19, it's up 350% against Bitcoin. And it's been able to hold that level now for 580 days. So Ethereum is where, like, if you go back to the first break up here, HEX launches on December 2nd of 19, which is here on the bottom. And then you get the run up. And then, that next summer, DeFi summer, Uniswap gets launched, July of summer of 2020. We have another pump against Bitcoin. So as things of value are being built on Ethereum is gaining in long-term value prop against Bitcoin. Bitcoin's literally just dumb rock crypto now. It's going to be $1 trillion asset class that the legacy guys can have fun making 3% on every couple of years, and it's 3x on every few years. So it's fun for them because it's got trillions of dollars in it. But for us, the potential and the opportunity is going to be in the better technology that things are being built on top of.
Exactly.